Hi everyone, Piotr speaking. In this video I'd like to share with you my thoughts and my analysis for the Euro, Great Britain Pound and Great Britain Pound Japanese Yen. These are the currency pairs I trade the most, so I hope you will like it. Let's begin with the Euro USD. That's the monthly chart. On the monthly chart I pay attention to this engulfing pattern based on candlesticks. I have a channel and a long support line on this monthly chart, and the market is currently around this channel and at this support line, this trend line. But what is important on this monthly chart is the count. So I have one of my counts, one of my alternative counts show this is a 1, 2, a 3, a 4th corrective wave at the moment, and there will be a 5 wave to the downside. I tend to think that way for two reasons. One of the reason is that the FIBO levels I have plotted here, are not reached yet, so there is still a room for a market to go deeper and reach the typical Fibonacci levels, what the market typically do. So we can expect it that the market will try to reach those levels. There's a second reason for that. If you plot a channel, this is a green one, the green one channel, so I plotted the beginning of a wave with a extreme of the B wave, okay, or here or here, then I still have a room for a market to reach the lower boundary channel line. Okay, so there is a second reason that the market may try to go deeper here. If we now switch to the daily chart and we'll start analyze the daily chart, you can see we had a butterfly pattern here in the last few days. So the strong downward move was caused partially based on this pattern, on this harmonic pattern as well. If you measure the retracement, the last retracement based on that movement, you will find that this was close to the 38.20 level, which is a typical level for a 4th corrective wave. I had a few internal counts based on this daily chart. One of them was even 1, 2, 1, 2. So as long this low will not be surpassed, there might be such a count, but this downward move is quite a strong one, but do not look like an impulsive wave to the downside. On the other hand, if we check some other counts or some other alternative counts here, so one of them was that this is a 5 wave up, and I think this is a 5 wave up. So 5, 3, there should be a 5, but I cannot find a nice 5 waves to the upside here as a C wave. But I think I should treat it as a C to the upside. On the other hand, but I don't like this upward move as a C wave. It do not count for me like a C wave. Not yet. This could be as a W, X, Y. Could be another X, and then Z. So the third corrective structure here. So we could have an WXYXZ structure. So a triple three. So this is one of the possible counts, but in that case, this downward movement here, this correction here, this one should count as a 5, 3, 5. And I said a few seconds ago, this do not look like a 5 waves. Okay, so there are a few question marks here, but on the other hand, usually this corrective structure they might be tricky, and they might surprise you. Okay, so if you treat it like that, you may consider both of those scenarios, what I do actually. Now I will switch a few levels deeper, and I'll try to explain the situation at that moment. So right now, what we have right now on the charts, and on the 3 hours chart, I have plotted this bat pattern Okay, and as you can see, the market reacted quite strongly and accurately to this 127.20 FIBO level. So I'm expecting the market will try to reverse in this area and at least go slightly to the upside, maybe to that trend line, to that resistance line, and that line might not be broken. Okay, and then another move, the market will try to break those lows. So lows around here, and then the second low here. So this is what may happen the coming week. And should this happen, then I will treat as a possible count the count shown at the beginning. So we have a completed fourth corrective wave, and a final wave to the downside has started. There is one point where I could say the last downward move is still a correction wave, yeah, because it goes in a channel. This is one point. Another point, if you check the internal moves, this is not a 5 wave to the downside. This is also not a 5 wave to the downside. This is a correction structure to the downside here. So I think this was in W, X, Y, X, and Z. Okay, so there's another corrective structure to the downside. There is a strong red candle on the weekly chart. This indicates a downward pressure. On the other hand, it was stopped at the Bollinger Middle Band, and there is a break of this trend line as well. So this could be a kind of retest in that area. But on the other hand, if you check this channel, you can see the market reacted at the upper boundary channel line and reversed and fell strongly to the downside. I have a few channel lines on this daily chart as well, but that one is not valid anymore. Okay, so I don't have any use of that one, so I can delete it. There is another 1, 2, and 1, 2. So the first 1, 2, sometimes the market react to those channel lines. There was a reaction at that upper channel line, and there is a lower channel line. We may have a reaction in that area as well. And actually, this what you can find on the 3 hours chart. This pattern suit to that scenario. Okay, so this may indicate there might be some upward move. Will it be a strong one? We don't know yet, because it depends on the count. Yeah, if it's 1, 2, 1, 2, and there's another third wave to the upside, then you can say, okay, this pattern gave us or could give us a strong upward move. But I may treat that downward move as a second X wave, and there will be another final third corrective structure in order to have a triple tree in this area. So there will be one, there will be a second one, okay, one, second one, and third one. X wave, another X wave, and a final third corrective structure, and then final move to the downside. If I go back again to this monthly chart, I may have another alternative count on this monthly chart as well. I can treat those movements here, internal movements, as A, B, C. It's an A, B, C, that's an B, and that's the C wave. Okay, so there's an A, B, and a C, and a finals. So it's an A B, bigger A, bigger B, and a bigger C to the downside. So in that case, the C wave started here. It's a 1, 2, 3. There is a 4 and a 5. And in that scenario, I still have a room for a downward move as well. So I think there are more reasons for this Euro USD currency pair to make another downward move and complete the structure lower. And if you check different ways of measuring those movements, external retracement, etc., you will find that in that area here, a few measurements meet together, so that might be a strong support area. Okay, in this somewhere here, and this goes with this with this idea of this channel, of those channel lines as well together. So this is pretty much what I think about Euro USD. Let's switch to the Great Britain Pound USD. I will concentrate mostly on the weekly and daily chart. On the weekly, I've got a strong red candle to the downside. On this monthly chart, maybe one sentence regarding the monthly chart. This is a big correction to that downward move, and this correction is not completed yet. Okay, let's concentrate on the weekly. So we've got a red candle on the weekly chart, this on the daily chart. That movement to the upside here, up to here, this is the bigger A, and this is most probably like 535. That's an A, B, and a C wave. A B wave, another C wave. So this is a construction of a zigzag. This downward move here, this is a 335. Market hasn't reached the lower channel line yet, and this will happen. This will happen, and it looks to me that the market needs to make a deeper correction here, so a bigger B wave to the downside. But the B wave should not break strongly through a resistance, through a channel line. If it's the case, it's most probably a third wave to the downside, not a C wave. So to keep it in mind, I can expect a X wave to develop in this area, and the X wave might retest the broken trend lines or the broken support lines, as you wish to describe those lines. For me, this is a support line, although this is a trend line, but this is also a support line for me. So the X wave might retest at least that line, or even the bigger line as well. B wave usually has a Fibo retracement level at least 70%. So I should expect the market to keep on moving to the downside, keep on falling to the downside, and reach one of those support lines, okay, or support areas. This is a support area most probably, and for those who keep attention to the support and resistance areas. But based on the count, I think this is a 3, this is another 3, and this is a 5 wave down, and this 5 wave to the downside is most probably already completed, and the market started reversing again. And this reversing, this will be a X wave, so at the end of the day I will have an WXY structure, or maybe another X and a Z structure, but I guess this will be a WXY. And after that, after this downward movement is completed, you can expect a strong upward move in order to complete the bigger A, bigger B, and a bigger C to the upside. Okay, so there might be a chance to prepare for a downward move and a strong upward move as well. And now the Great Britain Pound Japanese yen, one of my favorite currency pairs to trade. If you check the monthly chart, one of my counts based on the monthly chart shows an area where the market may complete this upward move as a 5 waves up, and this might happen around 200 or around that area here, around that corrective area, corrective structure area. If you check the weekly, then you have a red candle on the weekly chart. I usually pay attention to the weekly chart, or as a beginner you should pay attention to the weekly chart. I still check my weekly candle, because the market tends to react to the weekly chart in the coming week. Okay, so this is a red candle, but this is a candle with a lower shadow. Okay, the Bollinger middle band is broken, and the candle is a red candle, so there will be some trades to the downside because, or based on this weekly chart. But if you check and consider the count based on the Elliott waves, I think there is a corrective structure, completed corrective structure, an A, B, and a C wave, and you can see the lower shadows. There's a long lower shadow. There's a red candle which was not able to break the low. There is a doji, and there are now two green candles. This is not completed yet, in my opinion. There will be another test of those lows as well. But what you can see, the market stayed within a channel lines. This may indicate that this is a C wave, not a third wave to the downside. I don't think this could develop as a strong third wave to the downside, because this is a 3-3-5 construction. So this is a correction. Okay, this is not a 5 wave to the downside. If it's not a 5 wave, so you have to have a, then you have to consider it as a 3 wave structure, as an ABC structure, and then you've got another ABC structure, and there is a 5 wave to the downside. So 3-3-5. In that case, I treat that upward movement as either as a 5 to the upside, or as a 1 in a diagonal, and then I have a second wave. There will be a third wave to the upside. So there might be a strong wave to the upside, and this upward move will surpass those highs. As an alternative structure, you should always consider an alternative structure, because you must be prepared for different scenarios. So alternatively, So alternatively, the last upward move was the final fifth wave on this weekly chart and on this monthly chart. So the market completed the move here, and we may have a strong red candle on the monthly chart, and if you consider this red candle with that hanging man and the doji, you may consider it as a reversing pattern, and the market has reversed and started a correction to the downside. And that ABC wave, this could be a bigger A in this downward move. Okay, so first part of a downward move, but I don't think it's the case. I would rather see a 5 wave to the downside, or a leading diagonal to the downside, not a flat correction. Okay, a flat correction is usually a typical correction which occurs at the end of the moves. So as a fourth wave, a part of a diagonal, stuff like that. But less than a new beginning of a downward move. I will switch now to the 3 hours chart, and I will talk a little bit about those movements here. As a C wave, we need a 5 to the downside, and this looks like a 1, 2, 3. This is an A. This is a probably not completed B wave to the downside yet. A, B, C. This is another A, B, C, but this looks more like an X wave. So this is an ABC as a zigzag structure. This is an X wave, and there will be another wave to the downside, and then we have WXY, a 3, 3, and a 5. Okay, so this movement do not looks like a new upward impulse. And if you go deeper and check the lower time frames. Let me move this 1 second. Oh, yeah, okay. So I consider this move as a corrective structure. This is an A, this is an B, and 1, 2, 3, 4, and 5. This should react to this upper channel line and give a reversing pattern around this area. If I check this movement to the downside, this is a 5, 3, 5 most probably. So a structure, a zigzag structure. An X wave usually do not surpass a B wave in a zigzag structure. So this is an A and B and a C wave. So this is a B wave. This X wave should not surpass strongly. So we may expect a reversing patterns in this area. and in that case we may have a downward move, and this downward move will give then a second test of that low, and there will be probably a third one as well, because this second one as a part of a B wave, so A, B and a C, so we have a fourth corrective completed, and then another move in order to complete the whole structure, most probably. So I will treat it that way and will concentrate myself on those movements. Okay, so this is pretty much everything. Thank you for your time. Thank you for watching. Enjoy your day.